hi guys, welcome to this Moneycontrol live stream on a beautiful Saturday morning. Of course, I'm Nandita, Khemka, and you're watching Opening Bell with me and my colleague Stacy, Pereira. And as I mentioned, it's a special Saturday given the fact that we are working. We will have a trading session of 2 hours today. Of course, the NSE is checking, the efficacy of the disaster recovery side. We will be making a switch to that from the primary side today, and because of which the NSE has kept a special trading session of 2 hours. But of course, going into this trading session, the cues are extremely positive. Spectacular session yesterday where we hit a new high and in fact hit that 22,350 mark for the first time. Whether or not this turns out to be a stellar Saturday or not, that's something that we'll be watching out for. Of course, trading volumes are expected to be on the lower side, but we'll be touching base with our technical expert and figuring out what should be the best strategy for the day really. But of course, 22,350 mark will be crucial to watch out for today as well. And the GIFT Nifty, of course, has hit that 22,500 mark. Let me tell you guys that. So, that level of 22,500 is also not very far away. But Stacy, in this calendar year, this will be the second Saturday that we'll be working on, right? Because last time around 20th January, we were supposed to have a special session, but then that got converted into a normal trading session.
Yes, so because we had that Ram Mandir holiday that was extended to Monday. So we are hopeful that this one's going to be, quite exciting because we have hit those highs like you're saying, and the GIFT Nifty also indicating that gap up of sorts that we could expect. But let's get into all of those details and see how you should be and the strategy you should be using for this trading session. But before we get to that, let's take you through to some of the top headlines. Well, the NSE and BSE will be conducting a special live trading session in equities as well as the future and options segment on March 2nd. This to check the preparedness of the disaster recovery system of the market in case of an emergency. The markets will trade in 2 sessions with a 5% upper and lower limit circuit. Now, the Nasdaq 2 overseas surged more than 1% to take out that 2021 record as investors are betting high on those mega cap technology stocks, which has helped against the slowing inflation. S&P 500 too closed above that 5,100 mark for the first time. It was chipmaker giant Nvidia which led the rally, gaining about 4%, while Meta saw gains of close to 2%. And trouble mounts for Paytm as the Financial Intelligence Unit of the Finance Ministry has imposed a penalty of about 5.49 crore rupees on Paytm Payments Bank for violating its money laundering norms. The FIU in its statement said that they found few entities that with their business networks were engaged in illegal activities, including organizing and facilitating online gambling. And among the stocks in focus will be a couple of auto names post that February auto sales data that has been trickling in all through yesterday. Stocks like Maruti and M&M will be in focus, whereas you also saw a BSE that has announced that index rejig, where Jio Financial Services has been added to BSE's large cap index, whereas names like IREDA as well as Tata Tech will be included in the mid cap index.
All right, I just want to give you a picture about, the FNOQs, right? In fact, in today's special session, all the securities, including in the futures and options segment, will have an upper and lower circuit limit of 5%. And those with a 2% limit will maintain their existing circuit limit to prevent that extra volatility in the special live trading session. But, if you look at the FNOQs, really, the rollover data is pretty strong, but if you look at the stocks that are in the FNO band today, Z is back in the FNO band, and if you look at the fund flow picture, DIIs have net bought somewhere around 3,800 crore rupees worth of equities in the cash market, whereas FIIs were buyers in the session day before yesterday as well. 128 crore rupee worth of equities bought in the cash segment. But on that note, let me bring on board our technical expert for today, Rohan Shah, who's the technical analyst at Religare Broking, joining in. Great to have you on the show, Rohan. First of all, do you expect the volumes to be low today, given the fact that it is a special trading session? Would you advise traders to avoid aggressive bets, given the fact that, it is a test session, so to say, to switch to the disaster recovery side from the primary side?
Yeah. Good morning, Nandita, and again, thank you again for inviting for me the show. So yes, definitely, it's a 2 hour session. So of course, the volatility will be low. It will be lackluster, like we see in the Mura trading as well. So definitely, for intraday or for this session, staying like would be a prudent idea. But for a positional point of view, the view remain bullish, and we expect that the upward momentum to continue ahead. To just add, in Nifty, we are eyeing 22,800, 23,000 levels in the coming sessions to come. So after a strong comeback in the last session and Nifty reclaiming its all-time high levels, taking a support at 20 days exponential moving average. So we believe 22,800 is the next level to watch out for. The positive point to note out for in the last session was the contribution from the private banking majors, which has been laggard and you can say underperforming from last couple of weeks or sessions. So we believe Nifty Private Bank could drive the next leg of up move in the Nifty. So why we feel so is that if you look at the Nifty Private Bank price chart or absolute chart, on the daily chart, it is making an attempt to give a breakout from an inverse head and shoulder pattern. And at the same time, if we look at the relative chart or the ratio chart of Nifty Private Bank divided by Nifty, it has dropped to like a year low cycle and has been reverting from there. So following the price action or absolute chart and the relative chart, this makes us feel that the next leg of up move in the Nifty Private Bank will help up to Nifty to inch higher towards our target of 22,800 and 23,008 or 23,000 levels. And on the downside, 21,900 is a very crucial support for the Nifty. So any long trades, we are advising our clients to keep a stop loss or on a closing basis below 21,900.
Right. Rohan, it's also Stacy on this side. Actually, you did mention how you're looking forward to the private banking space really pushing up this rally, and we've seen some bit of underperformance so far, but also give us some perspective on the PSU side of things, because, those valuations also people would say now have been quite stretched, although they don't compare to what the private banks have seen. So where do you see that, between the private and PSU banks, where would you then take your bets?
So yeah, again, good morning. So comparing PSU and private bank, PSU bank in terms of risk reward is not much favorable. But yeah, two or three stocks are our top picks. That is, of course, first SBI, Can Bank, and Bank of Baroda. But any traders who is like focusing on risk to reward perspective, that at this point of time, private banks are looking more lucrative compared to Nifty PSU bank. So going forward, we are more focusing on private banks and taking a backseat in the PSU banks overall.
Rohan, pertaining to the special trading session, any chances of executed trades getting cancelled in the second part of the session? Should traders ready themselves for that as well? And secondly, what would your strategy be for today, FNO strategy?
It's a very totally a new session, so anything can happen. I'm not sure how it will pan out. So to be risk averse or like it's better to stay light, as it's a very 2 hour session and it has been like you can say an experimental session. So it is also a very important session to be like keeping the investors' wealth on a not on risky side. So it's a 2 hour session. We are also advising client to stay light, and we are utilizing a buy on dip strategy in the Nifty. So any dip towards support zone of 22,200, it can be a good buying opportunity for the Nifty, and on the higher side 22,350, 400 in the intraday side we can expect on the momentum.
Right. Rohan, anything on the auto pack, because we've seen them quite rally in the past few sessions at least, and yesterday we saw some data coming out there also which would lend support. So any top picks there that you would suggest from the auto names?
We are also focusing on the auto space. Tata Motors in a one stock, which is a breakout candidate, and we are expecting to like 5 to 7% up move in this counter. And one more is like a pullback candidate, that is Eicher Motor, which has also we have been tracking from last couple of weeks and currently trading at a very crucial support and offering a good risk reward opportunity in Eicher Motors. So Eicher Motor is a pullback candidate, but with a good risk reward opportunity. So these are the two picks in the auto space, that is Tata Motors and Eicher Motors.
Rohan, we saw a very stellar move coming in on the metal pack yesterday. Although I was, looking for the trigger, couldn't find one. But particularly for the charts of Hindalco, after the drubbing that it has seen in recent days, do you think much of the selling is over? What are the charts really saying? Is it in the oversold zone? And whatever attempt it made at recovery yesterday, a 3 to 4% kind of up move coming in there. Do you think there is more to that, and it could find higher levels on the charts?
Yeah, totally agree. Like if you look at the metal space on the higher time frame chart, this was like a move from a support zone, forming a higher and higher low. So definitely a good recovery from the metal space. And Hindalco 500 was a very strong support for the Hindalco, and the good part is it managed to hold that support. So yes, we can see some recovery. But in the metal space, we have two stocks which can do well. Of course, the first one is Jindal Steel, which in this space we are expecting a 5 to 7% in next 1 to 2 weeks. And the second stock is Tata Steel. Tata Steel looks good for positional as well as for the short-term trade. So any investor or any positional bet, you can hold the stock for 2-3 months. So Tata Steel is a one stock which looks very good on the chart, on the daily chart as well as on the weekly chart. To just give you a glimpse about the chart of the Tata Steel, the Tata Steel has given a breakout from a volatility contraction pattern, which has very high success ratio in terms of unfolding well on the charts. So this is our high conviction bet that Tata Steel should do well in the coming 2 to 3 months. So from a positional point of view, we are betting on Tata Steel, and traders who are very short term perspective can move to the Jindal Steel.
Right. With that, I think we've just about 20 odd seconds to go for the market to open. Of course, yesterday we hit the levels of 22,350, 53. That is the record high that we made, although ended somewhere around 22,000. 383 or something, but looks like we are poised for a gap up start as well. The GIFT Nifty was above that 22,500 mark. If you look at the Nifty, of course, new highs there, 22,400. We've conquered that level, and the broader end of the market's also doing fairly well. Sensex, of course, up somewhere around 168 points. Nifty cruising along 22,400. Let's take a look at the Nifty Bank Index, marginally higher, but defending that 47,300 mark. The Nifty Bank Index, as I was mentioning, and let's take up pull up the broader end of the markets. The Nifty Midcap Index, I think that is also showing strength. 0.5% uptick coming in there. Let's take a look at some of the other sectors that are doing well. Metal pack for that matter, 3.5% gains in the last session. Let's see how that index is performing today. Whether there is some bit of cooling off. No. I mean, you can see more strength being added. 0.5% uptick there. Nifty Metal. Autos should also come up on your screen. Yesterday we saw the auto sales data for February trickling in, and auto index as well, 0.5% up. So I think the texture of the market remains on the positive side. We saw a gap up open. The broader end of the market is doing well. If you look at the benchmarks, they are of course extending those gains. So yeah, record high. The Saturday session seems to have started on a stellar note this morning. And if you look at some of the gainers, I mean, I'll just toss to you, Stacy, in a bit. But I think Moto, that is the top Nifty gainer. 1.5% uptick coming in, clearly reacting to the sales data that came in post market hours yesterday. And Tata Steel also, building on the gains. It was the top Nifty gainer yesterday, gained in excess of 6%, and today as well among the top Nifty gainers. But take us through some of the other movers and shakers in the session, Stacy.
Yeah, in fact, we will see that up on your screens in just a bit. What are those that are really adding to it? Like Nandita was pointing out, Moto Corp, of course, being in that top list. There you also have Divi's Lab and surprisingly Tata Steel from the metal pack that is really gaining and seeing some bit of traction. We've been seeing those metal names really take it higher. We also have Apollo Hospitals, Wipro and Tata Motors again from the auto pack there in your gainers. L&T, HCL Tech as well as Power Grid among your top gainers in trade. But on the other side, the flip side, the losers and the laggards in trade are Bajaj, Finserv there, Bharti Airtel, NTPC also making it to this losers list. We do have Nestle India, Reliance now, after seeing, in fact, yesterday one of the, the ones lending that support was the heavyweights, and Reliance being one of those names. But today, somehow, coming under some bit of pressure there, we could say the stock trading a little bit in some bit of pressure. But those are your gainers and losers, and pretty much what we were expecting, Nandita, also to see in this session. It has seen that, higher open, new record highs, and we've been saying this every day pretty much in the last whole week, saying, we're conquering new heights. But the special session will definitely, have at least that positive to it, even though we're coming here on a Saturday morning. We are going to see this kind of action. It's only about an hour's of trade now, and then we get into a 75-minute break, and then into that DR side that will be taking over. So that's what we are going to see. But let's get back to our guests, in fact, and ask them how they are looking at it. Rohan, these are the levels that you were looking at for the Nifty as well as the Bank Nifty. That one also, getting into that above 47,000 levels. So are these levels what you were expecting in this special session?
So yes, it was expected that the Nifty would open on a higher side, as it was reflecting in the Nifty Gift Nifty. So yes, but the point is, as we move forward, I think we cannot see much volatility, much higher side. It would be a lackluster in a, being volatile in a defined range, sort of like 100 points in the defined range of the Nifty and 200 to 50 points the Bank Nifty. So today, of course, it's a very small session, so we cannot expect much in the Nifty and Bank Nifty. But yeah, it's better to stay light and position more on the positional perspective, that is next week.
Well, let me also bring on board Anirudh Garg. He's the partner and head of research at Investec PMS. Good morning, Anirudh, and thanks for joining us this Saturday morning on this special trading session. Well, we are seeing new highs being conquered, so would just take your first reactions on how it is like to be trading on this special trading session, as well as what you could expect moving on from here for the markets overall, that we are, conquering these new highs.
Okay, first of all, thank you for inviting me. It's always a pleasure to be at the Moneycontrol TV. And a good initiative NSE is taking. The Indian markets, a lot of capital, a lot of investment is involved now, and disaster recovery is something they should have looked at, and they're taking it very seriously. As far as the markets are concerned, the last time I was on Moneycontrol, we told very clearly that the risk reward ratio for us has shifted from mid and small caps, and now the large caps, they seem as better bets. We are still very bullish on the large caps and the Nifty as such. In terms of sectors, I believe that the old economy sectors, which have been neglected so far, like metals, Nandita was asking what is the prime reason for why metals are shooting up. The prime reason that I believe is that metals are very, very cyclical. And since the global growth was not seen in the last couple of years, the metal prices in India and the stock of metal and the stock of scrap in India was at its lowest. I've been talking to a lot of steel mills and a lot of aluminium people. The prices in India were comparatively low, which have picked up in the last few months. There's something called a price differential when it comes to the pricing of the metals on the board and in the physical market. So that difference has increased to an all-time high, and it has suddenly decreased, which means that I would say that the demand for metals is coming back, and we are very bullish on the metals as well.
Right. Hi, this is Nandita also coming in. I want to get in your thoughts on the mid and small cap universe. Of course, you had that SEBI advisory, right, wherein they have mandated or suggested that funds put in place a protection policy for investors to shield them from the froth that is building up in the broader end of the markets, right? Here on, do you expect fresh inflows into mid and small cap funds to slow down, or do you see the chances of forced selling now in that end of the universe? Because the regulators have in fact noted the fact that there is froth building up in the broad end of the markets after the kind of rally that they've seen. What are your thoughts there?
Firstly, I'm very, very impressed by the regulator. This is something that they should have done. And, we have seen frauds build up in sectors from time to time, be it technology in 2000 or Reliance stocks in 2007 or IT and pharma later. So what is happening here is that I would say the mid and small caps have just outrun the pace. The pace was a little more. If we talk about the long-term trend, the broader trend, it will still be in favor of mid and small cap. Why? Because this is an old economy run which focuses on value, and value is more prevalent in mid and small caps rather than large caps. So mid and it's just they've overheated a bit. SEBI, on the other hand, the regulator is right in saying that the unnecessary loss to an investor, to a retail investor, should not be there when the redemptions come. So yes, a part of, I believe that the right way to go about it as a fund manager is that even in your mid and small cap portfolio, you should have a percentage of large caps, which would help to give more liquidity to your portfolio. And as investors, as retail investors, we are always buoyed by the best performing sector in the market. That is where we all want to be. 2 years ago, nobody wanted to be in the PSUs. Today, everybody wants a share in the PSU run. So yes, I would cautiously advise the investors to be cautious. It's not that the PSUs won't perform in the future. They are wonderful companies. They are transforming, but ultimately they are cyclical, and with cyclical comes a lot of volatility. So one should watch out for that.
But tell me one thing, is it too late to enter the PSU party? Or do you think people who have missed the bus have missed it? Or do you think there is a lot more room for upside and any dip should be bought into? What are your own thoughts there?
I believe that if you can handle the volatility that can come along with the PSUs, if you will not be swayed by a 25% fall in your overall portfolio in the PSUs, then it's okay if you have that stomach. But if not, then yes, unfortunately, you have missed the bus.
Right, missed the bus, but let's also, address a couple of news that has come out, and we did see BSE talk about the index rejig that it will be taking on to, and in that sense, we're going to see Jio Financial Services being added to the BSE large cap index, whereas stocks like Tata Tech, JSW Infra, IREDA, those will be added to the BSE mid cap index. You also have Container Corp, Emphasis, as well as Voltas, which have now been excluded from that BSE mid cap index. So of course this rejig, we did see NSE also come out with that their set of rejig that they will be putting in place come the end of this month. But what are the kind of inflows that we will see in these certain stocks that have come out and come in? In the NSE we did see UPL be excluded, whereas Shriram Finance getting its place in the Nifty 50. Now these names here for the BSE as well. So maybe Rohan can tell us, what are the kind of inflows and how are we to be trading in these stocks now once they will be included into these indices?
So yeah, just talking specifically about Jio Financials, it has rallied a bit. But if you look at the overall chart, of course, the data is not much available on the chart, but the data we have available, it's showing a very good formation on the chart side. And it has been holding a short-term moving average. Trend is positive on short-term and medium-term chart. So yes, it's a buy and dip candidate. To specifically talk about Jio Finance, any dip towards 310, 305 can be a good buying opportunity again. The stop loss can be placed below 290, and the higher side, the targets we are expecting it's 340 and 345 again on the very short-term period of time. But any investor who has a time horizon of like 3 to 6 months or 8 months, definitely this is a very good stock. In technicals, there is a pattern called IPO based breakout. So this is one very beautiful example we can talk about. So overall, looking at the chart pattern and price action, so yes, in short term as well as on the positional front, this stock definitely good.
Right. In fact, Anirudh, maybe you could also come in on this and give us your sense. He did speak about the technical part of how these IPO stocks, but overall, if you look at it, Tata Tech, IRE Day, they've seen massive rallies and also some bit of correction coming in post that. But overall, with the primary markets, how would you advise investors and even traders on how they should be looking at it, given the slew that we've seen of IPOs hitting the market?
The major problem with the primary market is not happening in the main board. It is happening with the SMEs. So that's a different ball game. I would advise investors that all SME companies are not bad, but please be very, very cautious of what is happening in the SME part. I think that is the real place where the bubble is being built up. And when we talk about, if you're talking about Jio Financial, I believe a wonderful company supported by a wonderful group, having wonderful partners in a wonderful country like India. So the future for Jio Financial looks good. I believe it is adequately priced right now, but markets can be, they do not like adequacy. So we believe that there is still a run left in Jio Financial, and it's one of the most successful IPOs in terms of IREDA. We had a holding in IREDA. Now we do not. We believe that it has run up a bit too much. IPO stocks depends upon company to company. Generally, IPOs on the main boards in India are very, very good investments. Sometimes they just run ahead of times, and the market caps, they do not support the top line and the bottom line, as was the case with Zomato and Paytm. But Jio Financial, I believe that the overall partnership and the structure and the book that they can cater to initially looks good, and the valuations, I would say, are not cheap now. You're not getting a lot of value when you go into Jio Financial Services at this point of time.
Right. What are your thoughts on the media space, after the announcement of the RIL Disney merger, and of course with what's happening between Zee and Sony, the dynamics are changing, and how, right? And of course, RIL expected to now own somewhere around 40% of the entire media and entertainment pie, right? So here, in the media space, of course, this huge joint venture that has been announced, how does it really, impact the other listed players? Dynamics changing. So should one, bet on this behemoth, RIL Disney, in the entire space?
Yeah. So I think RIL had an ambition of going into and leading the, the television world for a very long period of time. And I think it's a wonderful deal. Especially from the customer's point of view. So we are getting two behemoths coming together to build something great for India. And I'm very positive on this move by RIL. And with the overall geo-economic environment that they are planning to build, I believe it will be a game changer for the company in the next 5 to 10 years. So as far as the Reliance is concerned, moving from old economy to a new economy, moving from a 10% growth to 20% growth businesses, overall, we are bullish on these strategic moves by the company.
All right, Rohan, coming to you now, private banks, we saw good traction yesterday after, days of underperformance. But today, once again, they are in the red as we speak. The likes of ICICI Bank, Axis Bank, Kotak Bank, all of these names have, come under profit booking. Would you advise traders to, buy on dips? What would be a trade for you in terms of some of these private sector banks, banking stocks?
So, as we discussed in the earlier session, that we are expecting a good up move in the private sector bank, and the dip in today's session, I believe, can be a good buying opportunity. We are bullish on the three private banks. The first one, of course, is Axis Bank. It's currently quoting around 102. It's 1096. So this is a good level for trading as well. And the stop loss can be placed below 1075. And on the higher side, we are expecting at least 1150 to 1175 in the coming session. And the two stocks which we are focusing on is ICICI Bank. And apart from it, pullback candidate again, that is HDFC Bank. On the technical front, if you look at the daily chart or the long-term charts, on the daily chart, we are seeing an attempt of formation of inverse head and shoulder pattern right at a very strong support area on the weekly chart. So these are the three candidates from the private bank which should be kept on radar for having a time horizon of at least 2 to 4 weeks.
Right. Well, let's also address a couple of stocks and news. One that will be in focus, of course, will be Paytm. This after the Financial Intelligence Unit of the Finance Ministry has gone ahead and imposed a 5.49 crore rupee penalty on Paytm Payments Bank. This under the PMLA law. Now, the FIU finds discrepancies in the operations. They've gone on to say that the bank has engaged in illegal acts, including organizing and facilitating online gambling. Now, approved discontinuation of several intercompany agreements with Paytm Payments Bank has also been put in place, whereas Paytm has gone on to cut ties with Paytm Payments Bank by ending those intercompany pacts. But if you talk about Paytm, and today, given this special session, there is that 5% cap that is put on the circuit limit, and if you can see on your screens, it is again, it has been trading on those levels. It's been seeing those upper and lower circuit swings for the past few weeks, in fact. So maybe Rohan, you can take this again and tell us how should one be looking at Paytm, and whether it should be a wait it out strategy for this particular stock.
So the best strategy, I believe, in Paytm is should avoid the counter, because as we know that there are a couple of reasons the stock has been declining from the past, and always it has been in the limelight. Any new day we are seeing some sort of news coming in Paytm, be it be negative, positive. So for trader, as in, it should be a good strategy to avoid as of now, because placing the stop loss would also be difficult in this counter, as we are seeing, as you rightly said, that in the last also we have seen a couple of circuits in the stock. So in this scenario, it would be also difficult for a trader to maintain the stop loss. So I think the good strategy would be to avoid as of now and look for a stable counter, or in this counter, wait for at least some stability, some base formation. And of course, there should not be any further news in Paytm. So that would drive the lesser low volatility in the stock.
Right, Rohan, getting your thoughts on two stocks, CG Power and Tata Investment. Of course, on the back of the nod to set up semiconductor plants, these two stocks saw a very good run-up yesterday as well. Tata Investment and CG Power, double-digit up move coming in on both the counters in yesterday's session. Do you spot a trade in any of these counters?
So looking at the CG Power chart on the weekly time frame, the stock has made an attempt to, give a breakout of its previous resistance zone, but unfortunately it has closed below the same. So as of now, it is not a prudent idea to create fresh position. Wait for a dip towards 450, 440 zone. At this point of time, it's better to avoid. Wait for a dip where we can see a favorable risk reward. So any trader looking for this stock to trade, wait for a dip towards 450, 455 zone. And the stop loss can be placed below 440. And again, on the higher side, the first resistance comes at 465 and then 480.
All right, Anirudh, coming back to you, lots of news flow around L&T, right? It's a proxy play for the Indian economy. It has set up an electrolyzer, recently, and yesterday, of course, reacting to that, order wins coming in from Middle East as well. Your thoughts on the entire industrial pack now, including the likes of L&T?
We are very bullish on the industrial pack because, one thing is clear, that public capex has done its part. And with the level that they are maintaining it on, 11.11 lakh crores, it is phenomenal for the Indian economy. Now is the time that the private capex joins in. We believe at Invacid that, the giant wheel, the giant wheel of getting the capex and getting the economy started is the responsibility of the government. They have the muscle power, they have the money power. So the giant wheel has been rolled out now. The private capex would join in, and the likes of L&T would lead that. So we are very bullish on the industrials, and L&T, we believe both L&T and CG Power, we believe are, would be the leaders in the pack, along with others like ABB.
Right. Okay, so, I just want to get in your thoughts on the entire, change in dynamics in the paint sector, with a new player coming in and the kind of aggressive targets that they have set. although they aren't really aiming for the numero uno position in the industry, they are aiming for the second position. I'm talking about Birla Opus, of course. But how does it, and of course we've seen the reaction in terms of stock price movement when it comes to Asian Paints as well. Among all this competition woes, do you think Berger Paints still looks like a good investment, even though Birla is in fact aiming for the second slot? How do you think the pecking order would change here on?
So I'll explain this in a little detail on how we see it. See, as we were discussing, that every cycle takes a particular type of sector to valuations that it has not seen before. So what happened with Asian Paints was that a paint company doing very well in its field, growing at a good pace because of their systems, and there is not a lot of difference between the products. What the product that Asian Paint has and that what Birla has, or what a Berger Paint has, or what Nerolac had. There's not a lot of difference between the products. It's just that Asian Paints had a good, I would say, supply chain management, and the technology was in place. But the valuations that the paint industry, especially the leader in the industry, you always see it from the leader's point of view. So the valuation that which it had reached, we had totally avoided Asian Paints and the paint industry for the last, I would say, 3 to 4 years. And going forward also, next 2 to 3 years, I believe that this was what we were waiting for, that a new person seeing such big margins comes into the play and rejigs the entire industry. I think it is time that companies like Asian Paints, they come back to reality. They've gone through significant time and price correction, but we still believe that the relative change is more in favor of other sectors which are getting support, maybe something like a capex or something like autos, or real estate, of course. But yes, so we are avoiding the paint. A Berger Paints may be a good bet, but we are avoiding the paint sector altogether because we feel that it had become, and led the last rally, it had become the leader. And going forward, the valuations in this sector are, for us, are not going to be that great. The competition will be really, really fierce. And hats off to the Birla Group for coming up. And yeah, of course, we believe more people would join in the competition, and the prices, as customers, we'll have better options, not as shareholders, I believe.
Right. Well, it is quite interesting to see how this special trading also pans out. And I'd like to thank my guests, both Anirudh Garg as well as Rohan Chand, for joining us this Saturday morning and giving us this stocks and strategies that one could be looking out for, not just for today's session, but also in the long run. And, whether this rally is going to continue, that is something that everyone will be keeping an eye out for. We will be coming back for the closing session as well. But for now, we'll be taking a short break, we could say, for that 75 minutes till we get back to that next session. But before we let you go, we will leave you with a few words that we heard from Mukesh Ambani at that extravagant Anand Ambani and Radhika Merchant pre-wedding festivities that are taking place in Jamnagar. Listen in to what he had to say.
Today, my father, Dhirubhai, is also showering his profuse blessings from high up in the heavens. I'm sure he's doubly happy because we are celebrating this joyous day in the life of his favorite grandson, Anant, in Jamnagar. Whenever I see Anant, I see my father Dhirubhai in him. His same can do, will do, nothing is impossible attitude. Jamnagar became the Karm Bhumi for my father and me, a place where we found our mission, passion and purpose. Jamnagar was a totally barren land. It was a desert 30 years ago. What you see now is the realization of Dhirubhai's dream. Jamnagar became the turning point in the history of Reliance. It continues to be a place where we launch futuristic businesses and unique philanthropic initiatives. Our sole aim is to enhance India's prosperity and contribute to the well-being of planet and all its people. In all humility, I say that Jamnagar will give you a glimpse of the rise of a new India that is vibrant, optimistic, and full of self-confidence.
All right, that was the chairman of Reliance Industries, Mukesh Ambani, saying how Jamnagar really turned out to be a turning point in the history of Reliance. But with that, we've come to the end of this edition of Opening Bell. But of course, we'll be back with Closing Bell at 12:15 p.m. So don't forget to tune in, where we take you through the last leg of this Saturday's special trading session. With that, it's a goodbye from me and Stacy. Thanks a lot for tuning in. But you guys stay tuned for all your other news and updates on Money Control.